We have the one and only Robin Cross with us, and of course he is with StoneX in Chicago, and he is who we lean on for information about our lumber market. So what's going on this week here, Robin?
Good morning, Marlon. Thank you for having me, buddy. So let's go into some prices, and then I'll give you the breaking details. So November right now is trading $4.99 even. That's down $2.50 with only 36 trades today, of which 29 came through the spread market. So on the outright, it's only traded about 7 contracts. January right now, which is soon to be your lead contract, is trading $5.02, down $1.50 with 46 trades over there. We just had some newly released data on the housing market that I would like to report before we get into the details of the lumber market. Yesterday, housing starts and building permit numbers were released, and they were pretty much a mirror image of last month's data. Housing starts came out up 7% at 1.35 million, and building permits, the gauge of future business, came out down 4.4% at 1.47 million rate. Unfortunately, that report was just more of the same in terms of activity, and I truly don't see them changing much one way or another. Although there is definitely some pent-up demand for housing, I just think the current state of high interest rates is truly putting a real damper on demand. Cash is king. And with massive inflation we've all been living with, the new potential home buyers just can't afford it. Furthermore, existing homeowners don't want to give up their 3 and 4% mortgage rate for an 8% mortgage just to have a new home. You know, the trade-off doesn't seem financially worth it at all at this time. So now over to our next set of breaking news. We just came out a couple minutes ago. We had existing home sales just released, and September existing home sales came out down 2% at 3.96 million. And that was pretty much right on the consensus of 3.9. So current inventory of unsold homes is around 3.4 months supply. And, you know, listening to me for several years, you know that's historically about half of what average would be. Medium existing home prices is it's up about 2.8% at $394,000. That's some big dough. Now, I guess over to the lumber side of things, Marlon, I truly don't know what I could say about the market that I haven't already covered in previous reports, because nothing has truly changed. For the last 13 months straight and counting, the market has been completely stuck in a two-sided range from basically 480 on the low side to 540 on the high side, with only a few exceptions throughout the year that we traded outside of those ranges for various reasons. You know, we had some curtailments that kind of pushed us through the high for a very short period, and we had some overstaying of longs during the expiration phase that pushed us through the low. But beyond that, it's been literally stuck in that same range. This has definitely been the flattest market of my entire quarter-century career at this point. So what's the causes of this extremely flat market? Obviously, housing and interest rates play a big factor, and there's no surprise with the lack of volatility being directly correlated with the launch of the new quarter-sized truck contract, especially when the stated goal of launching that new contract was to calm down volatility of the markets of our market's most volatile contract, which was clearly the lumber, as we were talking about during the break. I miss the times when we have crazy highs every day and crazy lows every day. So, I guess maybe I'm just an action junkie. But furthermore, slow cash sales are another big factor because traders have to be right on every single trade. You can't really take any speculative chances, because if you're wrong, there's no movement to kind of offset a bad move. So guys are literally sticking directly to what they need to do. So there's really no speculation at all. And furthermore, with the lack of discount or a lack of premium, there hasn't been any hedge opportunities. So I do believe this is going to change, Marlon, as we get into January. Because you get a lot of position evening for tax ramifications on futures, mark-to-market stuff for the close out of the year. So that usually generate some momentum. And also, there's an old saying in commodities, be fearful by Halloween and thankful by Thanksgiving. And that's because you typically get, some end of the year shutdowns. They release it. And I believe because it's so slow, there's a good potential to see those shutdowns being a little longer than our typical 2 weeks that we're used to. So stay tuned on that. But other than that, that's all I got this morning. And hope you have a great week.
Awesome information. Thank you, Robin. Appreciate that very much. That's Robin Cross. He is with StoneX in Chicago. We'll pause here, and I'll get you updated on our cattle and hog market activity next.